So in September, capital city home values increased by 0.1%, and outside of Sydney, Adelaide and Brisbane, we actually saw falls across most capital cities. But you look at the trend, and the trend's showing that over the last 3 months, values are up 2.9%, and over the last year, they're up 9.3%. We are seeing a bit of a moderation in the level of capital growth across most capital cities, but it'll be interesting to see whether or not that continues. I would expect the next couple of months we'll see slightly stronger growth than what we saw in September. Well, the strongest growth over the last year has been in Sydney. Values there are up 14.3%, followed by Melbourne, where values are up 8.1%. At the other end of the spectrum, we see markets like Canberra, where values have increased by about 1.5%, and Melbourne and Perth, where values are up slightly more than 3%. The divergence in the market, I guess what we're seeing at the moment is really the strong level of demand exists in Sydney and Melbourne alone. We're seeing sales volumes pick up a bit elsewhere, but we're not really seeing much in the way of capital growth outside of those two capital cities. There's no real surprises in the data, only so much that maybe we expected the growth to be a little bit stronger given how strong auction clearance rates have been and the volumes at auction as well throughout the early part of spring. So that maybe is a little bit of surprise. Also the fact that only three of the cities actually saw values increase over the month, but generally speaking, I think the point is that the growth that we saw in September at just 0.1% is probably unlikely to continue on to the future. We think it might be a little bit stronger than that over the coming months. If we have a look back to last year, value growth was still quite strong in spring, but nowhere near as strong as the growth we saw in winter. Having had a very strong winter period for growth this year, I think we'll probably see a fairly similar trend over the coming months, whereby the growth throughout spring is there, but nowhere near as strong as what we saw throughout the winter months, despite the fact that we've got a lot of properties going to auction and fairly high auction clearance rates both in Sydney and Melbourne at the moment. Well, beyond that, I think we've had almost 2.5 years now of growth in this growth phase, and typically that's a fairly long period of growth in the market. Our view is that we'll start to see the rate of capital growth wind down, and we're already starting to see that evidence in both Sydney and Melbourne. At a national level, capital growth on an annual basis peaked in April of this year and has been slowing ever since. And whilst we might see a bit of a slowdown in Sydney and Melbourne, I think we're starting to see signs of a pickup in other markets like Brisbane, Adelaide and Hobart. Whether that continues, I guess who really knows. But I think agents need to be telling people that the capital growth we're seeing at the moment can't continue forever. Particularly from the investors' perspective, they're very active in the market at the moment at a time when yields are very low and you've had capital growth for a long period of time. So they do need to be cautious, and they do actually need to focus on that yield, not just the capital growth.